Good afternoon and welcome back to Trading Options Network. Today is going to be a relatively quick training, but of course, before we go ahead and get started, let's go ahead and get this disclaimer out of the way. Remember, everything discussed is just solely the opinion of myself, not the opinion of Trading Options Network. That being said, I find today to be pretty interesting. I'm actually going to go back here. I was just looking at that. Yesterday I had mentioned during the midweek recap that the Philadelphia Fed Manufacturing Survey was going to come out today. The numbers were going to come out. And I mentioned that I didn't think it was going to have a huge impact in the market. Might cause it to move just a little bit. But the funny thing about that is the number came out and it was way, way higher than expected. If I go ahead and click on this, you can see exactly what this means. Index rises from 15.5 versus a forecast of 2.5. I mean, we were not expecting anywhere near the number that came out. And basically what this is any reading above zero indicates improving conditions. And then this is the third consecutive positive reading, the highest since April of 2022. Now, this is very interesting to me because obviously, with inflation and, a lot of people feel the impact of rising prices. I don't necessarily know how I personally feel about this number. Normally, I would say it's great. But again, with the rising inflation and a lot of people struggling to, really just pay for their everyday necessities, this kind of shocked me. It really kind of did. So, that being said, let's go ahead and take a look at how the market is reacting. Now, let's go ahead and I'll click on the 5 minute to kind of get a little bit more of an insight of the day. So when the market first opened, it actually dropped just a little bit, but then it just took off. And I do believe that was because people were excited. They had something to be excited about in regards to that number that came out this morning for the Philadelphia Fed Manufacturing Survey. I think a lot of people were excited. And then, what would that have been? About 11, we'll call it 11:30 Eastern time. The sentiment completely changed. And it just started going down and down and down and down. And it went down for about 2 hours straight. And I think a lot of people are still in the same boat of what I just talked about. Why in the world is this number coming out so well when, even though, yes, there's a lot of money being spent and money that's going around and, in all honesty, money being printed, why is this number so high? And again, I think I really do believe that is a facade. Okay? Yes, I'm sure it's the right number. I don't think they fudged the numbers by any means, but I really think it has a lot to do with the fact that just inflation and costs are so high. And therefore, I see it almost as a bad thing. And I think a lot of people are still feeling that, considering the inflation is still really high. The CPI came in hotter than expected last week. So I really do feel like, this is going to, I'm not going to say the Fed numbers or the Philadelphia number is going to cause the market to drop. That's not what I'm saying. But I really do feel that it's really more, trying to think of the right way to say it. It is only another supplemental reason as to why the market will continue to move downward for a little while. Again, let's go back to the day chart. I'll zoom out a little bit. We did go up earlier in the day, as I had mentioned, but since then it's just gone down and down and down. And again, we are going to have, it looks like anyways, another red day. So again, as I had mentioned yesterday, I do feel like the 480 range is definitely in play. Okay, right around here. Go ahead and draw a line. Boom, boom. I would not be surprised. I'm not going to say it's going to be red all the way down to that line, but I feel like it might, kind of go up and down and be a little choppy on its way down to 480. And then at that point, that is going to really give us an idea of what we should expect moving forward. Does it bounce off of 480? Does it bounce slightly off of 480 and then break it? Does it just blow right past 480? That's going to give us a good idea of where we're really at as an economy, in my opinion, and where the market's going to go once it hits that level. I really do believe we're going to hit 480. It's just, for me, it's a matter of when, not if. But again, that is solely my opinion. That being said, I did mention this was going to be a pretty quick training. You know what? Let's go ahead. I actually do want to bring up a couple of things here. Yesterday in the midweek recap, I mentioned Cloudflare, and sure enough, I mentioned I feel like it's going to continue to move down, and I did open up a bearish position yesterday, and this morning I did, and that's exactly what's happening. It's definitely moving further down. I still think it's going to go down quite a bit. And then the other one, why can't I think of it off the top of my head? Shopify. So let's go ahead and pull up that chart. Shopify has been a little bit stronger today than I was anticipating. But the interesting thing for me, and why I'm actually really excited that I have a bear position, I did open up a bear position on this, is that even though the bulls tried to pull it up, now this was early on. The lower wick was very early on in the day. It did go down, but then the bulls just decided they wanted to bring it all the way back up to the same highs as yesterday, or pretty close to it. But since then, it's been nothing but bears for the most part. They brought it right back down, and I would not be surprised if we have maybe a little bit of a red candle with some high, long wicks on both the top and the low end. And then from here, it continues to move down. So again, I'm really excited about this position. I did, interesting enough, I did actually open up a bullish position on Meta, and it was more or less I guess you can say an insurance position in case the market did reverse. This one it has been quite strong recently, even though it is in the technology sector, and I know I did mention that I would not be surprised with the technology sector. It's also in communications, which is another reason why I liked it. Communications has been a little bit stronger. But if the market does in fact go up, I opened up this position on the bull side, more neutral to bullish, just in case everything does just shoot back and suddenly the market starts bouncing. I don't see that happening, but I did like this one to the neutral to upside, and I loved it in the beginning. It has come back a little bit, but I would not be surprised to see it trickle in. I have about a week and a half. I did a vertical spread that expires a week from tomorrow. So it's 8 days till expiration. It's a vertical spread. So I'm going to let it sit unless it just starts plummeting. Then obviously I'll probably close the position, take a small loss, which fine. If this one starts plummeting, that just means that the other positions on the bear side that I did open are probably dropping substantially, and I'm totally okay with that. So that being said, I'm going to wrap this up. I hope you guys learned a little bit today. Again, just want to emphasize everything I said today is my opinion, and my opinion only about the Philadelphia Fed Manufacturing Survey and what those numbers mean. But that being said, I wish you guys a great rest of your day, and we'll talk to you tomorrow. Bye-bye.